Bigger tax refunds in 2025, especially for seniors? You better believe it. Hi, my name is Robert J. Bailey, and I've been a CPA for the past 34 years. Now, today, we're going to talk about one aspect of the Big Beautiful Act and what it means for seniors and non-seniors, and why, just on that one component, we're going to see a surge of refunds in 25 compared to 2024. And that one component is the standard deduction. Now, if you are under 65 by December 31st at the end of the year, you get the regular standard deduction. Now, for single, that went up $1,150 to $15,750 for 2025. If you are married filing jointly, your standard deduction went up $2,300 all the way to $31,500 for 2025. That is fantastic. Now, if you are a senior, meaning you are 65 by December 31st at the end of the day, even if you turned 65 on December 31st, you are a senior for 2025. The same with your spouse. Now, the existing senior deduction, and there always has been one, it went up $50 for single filers, and it went up $100 for married filing jointly. However, under the Big Beautiful Act, there has been an additional $6,000 per person, per senior, on the tax returns. So what do I mean? What I mean is, as a senior, if you're single, you're still getting the standard deduction, the increase to $15,750. You're still getting your existing senior deduction, which is now $2,000, and you're going to get an additional $6,000 deduction. All right? And if you are a married filing senior, you are still going to get the standard deduction of $31,500. You're going to get the extra senior deduction of $3,200, and you'll get an additional $12,000 deduction as a senior. That's if both you and your spouse are 65 as of December 31st. That is fantastic. Why did this occur? Well, if you remember, the president had stated he was going to try to get, within the Big Beautiful Bill, he was going to try to get Social Security taxes, a tax on Social Security, abolished in that bill. That did not occur. So instead, this extra $6,000 for seniors was included in the bill. Now, why I said there's going to be a surge in tax refunds? Well, first of all, if you're not a senior, look at the increase of $1,150 for a single person, $2,300 for a married filing jointly. That's definitely going to put more money in more people's pockets when they file their taxes. But if you are a senior, remember, you're looking at $1,200 extra within the normal deductions you got. You're looking at another $2,400 for married filing jointly, and $6,000 single, $12,000 married filing jointly extra on this year's tax return. Now, what effect is that going to be for the American senior? Well, right now, about 64% of you who are collecting Social Security, you already don't pay tax on your Social Security because you don't make enough money for Social Security to be taxable for you. That's 64% of you right now. But the effect of this bill is now going to be 88% of seniors on Social Security will not pay tax on their Social Security benefits. That's huge. It's a lot of seniors out there, and to go from 64% to 88% now not paying taxes on their Social Security is, again, going to be a surge of extra money coming into their pockets, and they so need it. So that's fantastic. Now, I also want to let you know that on Thursday, September 4th, Senator Ruben Gallego introduced a bill titled You Earn It, You Keep It Act. All right? This act will permanently eliminate taxes on Social Security. Now, to pay for this bill, because you always got to pay for it, the bill expands Social Security payroll tax to annual earnings for those making over $250,000. So that's good. That pays for the bill. Now, this bill makes sense. In my considered opinion, Social Security benefits should never have been taxable. And let me explain why. Think first of just a regular IRA. If you make $100,000 and you contribute $2,000 to an IRA, you're going to pay tax on the $98,000, okay? That IRA contribution is going to get deducted from the 100. All right. Now, think of a Roth IRA. Now, if you make $100,000 and you put $2,000 into a Roth, you're still getting taxed at the $100,000. You will get no tax deduction for the $2,000 Roth IRA. However, someday when you're 59 and a half, over 59 and a half, you'll be able to take money out of that IRA, the Roth IRA, and it's tax-free to you. Well, isn't Social Security benefits about the same, except you had no choice? It was coming out no matter if you wanted it to or not. So in other words, if you made $100,000, 7.65% of that was coming out of your pay for Social Security and Medicare, and you weren't getting any deduction on your tax return. You were paying full boat on the $100,000. So all this act does to me is makes Social Security what it truly is. You are putting in for someday for your pension fund, which is the same as a Roth IRA. You're putting away for the future. And in the Roth, you get no deduction in the current year. For your Social Security that was taken out of your check, you got no deduction in the current year. But someday, that Roth is not going to be taxable when you take the money out. And so Social Security should have never been taxable in the first place. But it was. So, very basically, let me go back to the big, beautiful bill on the standard deduction. I forgot to tell you that the $6,000 extra senior for single and $12,000 for married filing jointly, that's in effect for 25, 26, 27, and 28. After 28, that will expire. All right? So this bill by Senator Ruben Gallego, well, that's forever. That's to eliminate tax on Social Security benefits forever. And we will keep an eye on that, and as the situation grows, I will do a video to let you know what's going on there. Now, in the meantime, at the end of this video, you'll see on the screen the reference to last week's video that I did on the American Worker Rebate Act. Very basically, to remind you, that is an act that was submitted by Senator Josh Hawley at the end of July. And that bill calls for a $600 rebate being sent out to each member of each American working family. There are limitations, but they're not bad. Now, what that means is for a family of four, most families of four would get a check tax-free of $2,400. So I just want to update you, because remember that bill was basically submitted right before Senate went into recess, and Senate was into recess until September 2nd. Today is September 5th. So I want to let you know that bill is now in committee. So what that means is the senators in committee are now reviewing that bill, and we're hoping it's going to now pass to the floor, be voted on by the Senate, be voted on by the Congress, and becomes law. And if that is the fact, I'm hoping that this can all occur by the end of the year, so that a family of four would see a nice $2,400 tax-free check coming in time for the holidays. Wouldn't that be nice? So please stay tuned to this channel, because as things develop, I will immediately do an emergency pod to let you know where we are. There are so many other things to know, and I'll be covering them in subsequent videos. And just to give you an example of the videos we have coming up, number one, the federal rate cut that I expect to happen in September, and what that means for you. The IRS has cut 25% of its personnel. What does that mean for you? Working past your retirement age. So if you have elected to take Social Security at 65, or you're going to take it at 67, and you keep working, is there any benefit in that for you as far as your Social Security benefits? Because remember, the benefits are still going to be taken out. So can that help you with the amount of benefits you get every month? The answer is yes, it can. And that video is going to explain why. And finally, as I had mentioned a moment ago, there are going to be more videos on the Big Beautiful Bill Act and the tax changes and how that affects you to put more money in your pocket. I just can't do them in one video because there are a plethora of changes that will affect you. So please subscribe to this channel to get more news about the various videos I stated, as well as other videos I'm going to be releasing. My goal here is to educate you in the tax law and in current events, what's going on, to help you put more money in your pocket. So God bless, thank you, and I'll see you soon.